Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Leja and I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video.
Forex is the short form for foreign exchange. All right, it refers to the trading of one currency for another. In a short form is known as FX. FX simply means what? Forex. Okay, in a simple thing, it said Forex trading is the buying and selling of currencies or commodities for money. All right, what can be traded in the Forex markets? We can trade currencies, we can trade stocks, we can trade metals, we can also trade indices, and many other things can also be traded in the financial markets. Now, we all know what trade is all about when it comes to commerce. Trade is buying and selling of goods and services, all right? Good. When it comes to currencies, we know we have the Naira, we have USD, that is dollars, we have the yen for Japanese, we have the euro, all right, for Europe, we have GBP for London, all right, that's pounds. So we have several currencies. Now, how do you trade these currencies? You trade one currency against the other. You can trade USD against GBP, which is Great Britain pound. You can trade JPY against NZD, all right, New Zealand dollar. You can trade CAD, which is Canadian dollar, against US dollars. That is when it comes to currencies. When it comes to stocks, we have things like Netflix, we have Coca-Cola, we have Facebook, we have Tesla, we have quite a lot of stocks that can be traded. All right, all these things can be traded. We have under the metals, we have things like gold, we have silver, all right. We have, I didn't also add oil. We have oil, crude oil, the US crude oil. All these things can be traded in the Forex markets. And what we're talking about is digital trading, all right? Digital trading. Now we also have what we call indices. Now you might be wondering, why did I color this one red? I colored it red because that is the instrument that we're actually going to be focusing on during this 5 days trading, okay? So let's proceed further. Now, under indices, we have the Dow Jones Industrial Average, which is known as the US 30. All right, we have the Standard and Poor, which is known as SP 500. We have NASDAQ. We have under NASDAQ, we have NASDAQ 30, we have NASDAQ 100 and more. We have the DAX, which is the Germany 30. Now, these are different countries that owns all these different kinds of indices. Now we have the Euro Tox 50, and then we have the synthetic. At the same time, this is colored red because we are going to be focusing on synthetic. Now we are going to understand that most of all these indices are highly liquidated. When I mean liquidated, what I mean is they move in huge liquidity, they move in huge speed, okay, that you can actually within 5 to 10 minutes, you can actually make money. But if you don't know what you're doing, within 5 to that same 10 minutes, you can actually lose money. So that is why you're here to learn, all right? Now, on the synthetic, we have what we call the volatility index, all right? We have the volatility index, we have the range break index, We have the boom index, we have the crash index, and we have the jump index. Now, out of all these index, we are going to be focusing more on the boom index and the crash index. All right. So types of boom and crash index. Under the boom index, we have boom 300, we have boom 500, we have boom 1000. Okay. And under the crash markets, we have crash 300, crash 500, and also we have crash 1000. Now, all these instruments, you trade them against dollars. All right. That is to say, you can trade boom 300 against dollar. That is, you can buy boom 300 to sell dollar, or you can sell dollar, or you can sell boom 300 to buy dollar. We are going to understand all this better, especially when we get into the main charts. All right. So what does it look like? What does the boom market really look like? Now, this is exactly how the boom market looks. Okay. In the boom markets, we always have the this long moves spike. Is called a spike. Okay. This long moves always dive to the upside in the boom market, be it boom 1000, boom 300, or even boom 500. We always have the spikes heading to the upside. All right. Why we have the little candlesticks, these things are called candlesticks. Even this long one you see here is also called a candlestick, but the way it moves makes it go with the name spike. Okay. So in the boom market, there's two characteristics of the boom market. You have the spike heading to the upside, and you have the little candlesticks heading to the downside. In the crash markets, we have the spikes heading to the downside and the little candlesticks gradually moving to the upside. Now, you can trade the boom and crash market from Monday to Sunday. Unlike things like the currencies, in the financial market, the currencies, you only trade them from Mondays to Fridays. All right. But when it comes to this index, you can trade it day in, day out, Monday to even Sunday. Okay. Now, what else do we have on a list? We have what we call the Forex terminologies. Now, it is important that as you're stepping into this industry, you should be able to talk like a trader. For you to be able to speak like a trader, you need to know these terminologies. Now, number one, we have what we call bullish. When someone comes and tells you, hey, the market is bullish today, he's automatically telling you that the market is buying. And when the market is buying, it means the price is going to the upside. If anybody tells you, hey, the boom 500 market is bullish today, he's automatically trying to tell you that the boom 500 market is going to the upside. That means it's buying or is rising. Okay. And if someone tells you, hey, crash 300 is bearish today, he's automatically telling you that crash 300 going to the downside. That is selling. The word bull, everybody knows what a bull is. Those animals that, if you have watched it in television before, those animals that hate seeing a red cloth. All right. And then you have people who hold a red cloth, flinging it in on the face of the bull, and the bull rushes to hit the red clothes. Now, when the bull rushes, it goes to hijack the red clothes, or whosoever is putting that cloth on. It hijacks the person to the upside. All right. That's why we call it bullish, means market is going to the upside. That's for the bulls. And for the bears, you all know what a bear is, right? And when a bear wants to fight, a bear wants to suppress its opponent to the downside. It wants to suppress and match its opponent to the downside, because that's where his strength is. So when we say the market is bearish, it means the market is suppressing to the downside. All right. So we have also what we call lot size. Now, a lot size is the total quantity of a product ordered for manufacturing. when we bring it in terms of Forex, a lot size is simply the total quantity of what you're buying or what you're selling in the financial markets. So as a trader, before you buy any commodity or any currency or whatever you want to buy or sell, you always want to make sure you look out for your lot size. If the higher lot size you use in buying whatever you're buying, the higher money you can make or lose. If you predicted that it's going to go bullish and it really goes bullish, you're going to make more money. Why? Because you used a high lot size. And if you use a low lot size, whatever you're buying or selling, if you're winning or losing, you'll be losing or winning little by little. Now, the best advice for all traders, especially for newbies or beginners, is when you get into the markets, always use a little lot size. Don't trade a high lot size. Now, when it comes to this lot size, the lot size is divided into 4 parts. We have the standard lot size, we have the micro lot size, we have the mini lot size, and of course, we have the nano lot size. Now, the standard lot size is the highest, okay, which goes on 100,000 units. Okay, it goes on 100,000 units. The micro lot size goes on 10,000 units. The mini lot size goes on 1,000 units, while the nano lot size goes on 100 units. Now, you can see the highness or the size of these things. So by the time you hear someone tell you the standard lot size is 100,000 unit, you should know what that simply means. It's very high. We're going to understand all these things even better when we keep progressing during the training. We also have what we call PIP. Okay, PIP simply means the unit of measurements to express the change in value between 2 currencies or 2 commodities. Now, we're using the currency pairs now as a typical example. When we have an example of the euro and the USD. If euro USD moves all the way from 1.1050 to 1.1051, now that's one that has changed a movement between the 50 here and the 51, okay, is known as 1 pip. You're going to also understand it better by the time we continue to dive into the charts. All right. Now, you need to also know that when it comes to trading, we have different tools you can use to trade. Okay, not necessarily to trade, but to analyze your market. When I say analyze, I mean you're trying to figure out how has the market moved and how can it likely move. Now, the essence of analyzing your market is because you want to understand what price can likely do next. Because with what price would do next, all right, is what is going to warrant if you're going to win or lose. All right. Now, Forex is gamble if you don't know what you're doing there. Forex is gamble if you just came in and say, hey, let me buy from here, or let me just sell from anywhere. That's where it becomes gamble, because you're kind of like guessing. But the Forex market is not gamble to traders who know what they are doing in the markets. All right. So now this is what we call TradingView. TradingView is one of the best platforms that you can easily use to analyze your markets. Okay. MT5 is where you execute your trades, and you can also use MT5 to even analyze your trade. But the reason why I'm going to be using TradingView to teach you guys during the course of this training is so that you can also get acquainted with it. All right. And then so that whatever you learn through here, you can always replicate it even on your MT5. Let's talk about the tools that you are going to be needing in order for you to be able to analyze your markets. Now, when you get to this TradingView, for you to be able to locate the boom and crash market, which we are learning, as you can see, this is volatility, all right? We're not learning volatility, we are actually learning boom and crash. Okay, let me go back. If you come to the trading view, you want to click here, delete this, and then every single thing is going to come out. So if you are trading currency pairs, that's what you're going to be seeing all this Odyssey, JPY, Odyssey, USD, Euro, Odyssey, all right, USD, all the currency pairs that are tradable in the markets, all right. If you are trading stocks, we have all this on the stocks, all right. If you are trading commodities, we have all these ones. There are quite a lot of them. If you have, so for the synthetic, what we're trading is the boom and the crash, which we have here. So I'll just take us straight to, let's say, let me use crash 500 as an example. Okay. Right here in our charts, this is called your charts. When someone tells you, hey, hello trader, go to your chart and show me what you see in the charts. This is what he means by your charts. Okay. Now, right here in your charts, we have several tools you can use to analyze your market, which if you come to your trading view here, all these things are going to be quite different on MT5. That is why you're going to watch another video that's going to teach you, put you through on your MT5, okay? So for those who have PC, you can also use this on your phone, but it's just that your screen is going to be a bit little, all right? But your MT5 is going to be perfect, especially for phone users. All right, so if you come over here, you want to click on trend line. So we have all these tools. You see, there are quite a lot of them, but I'm going to give you the few and the most used. Not all of them are being used. So number one, we have the trend line. Number two, we have horizontal line. Number three, we have the horizontal ray. You can only see the horizontal ray on the trading view. Horizontal ray is not on MT5. We have the arrow. We also have the rectangle. I'll be needing this brush so I can draw things for you guys. We also have the rectangle. I'm also going to be needing this to show you guys some things, but you wouldn't see these on MT5 though. Let me see also. All right, so I'll be needing this, and I'll also be needing this just for the sake of this training tonight. Okay. Now, on your chart, here we have candles, which we call the candlesticks. The three basic ones that are more popular is what? The line charts, the candlestick, and the bar charts. On your MT5 is only these three you're going to see. The line chart looks exactly like this. Look how you see how it looks on my screen. This is how the line chart looks. And I believe quite a lot of you do see things like this on news. You see some lines going up, down, you know. This is what we call the line charts. We have the bar charts. This is exactly how it looks. The bar chart is what they usually use back in the days, back in the days when Forex wasn't for retail traders. Now, retail traders are just people like you and I, okay? Why the big traders, the people who move the markets, are those who are known as the higher institutions, the banks, okay? Huge companies, then those are people who move the markets. For instance, if we take an example like crypto, you always hear they say crypto is rising, or BTC is rising, or BTC is falling. Who makes BTC rise or fall? It is not those people. It is not people like you and I who are buying BTC and holding it. No, the people who make BTC rise or fall are the higher institutions. For instance, if you've heard about Elon Musk, the owner of Tesla, you know, when he debited 2.something trillion of shares, all right, that he has with Bitcoin, Bitcoin fell all the way from 50-something thousand down. Why? Because these higher institutions has just removed a huge sum of money out of the markets. All right. So the financial market is moved by the higher institutions. It's not moved by you and I. How actually do we make money here? We simply make money by playing along with the financial markets. For instance, when the financial market moves markets bearish, as retail traders, we also want to make sure that we are selling together with the financial markets. When the financial market decides to move market bullish, we as retail traders want to make sure that we also buy along with the financial markets, because as long as we are buying with them, we are making money. But their will is not that we should buy with them. Their will is that they should be buying while we are selling. And in that way, they're going to hit us in loss and take money out of us retail traders. That is why we come into the market to learn how to trade first, even before depositing our real money to trade this market. And it's beautiful now because everybody can now have a demo account. With your demo account, you can always practice. When you create an account, when you create a demo account, you're going to have 10,000 demo dollars. It's not withdrawable, okay? You can't withdraw it. It's only there for you to be able to easily buy, sell, and practice. Your buying and selling is your practicing. You're practicing how to buy and how to sell. You're practicing the right time to buy and the right time to sell. That's the use of the demo. So when you know within yourself as a trader that, yes, I have learned this business and I'm confident to go into it, then you can decide to deposit money into it and trade with your real money, because it's your real money that's going to give you the real profit when you make profits. All right. So our job here in the Bullish Bear Academy is to teach you how to trade this market. All right. So that when you go into it with your real money, you should be coming out with money every single day. But I always tell my students, there's no need to lie about it. You hear a lot of people tell you, oh, you make money, you make money. I'll always tell you the truth and nothing else but the truth. In this market, loss also is inevitable. In fact, 95% of traders in the forex industry make quite a lot of losses than profits, and just few make this profits. And who are those few? Those few are those who learn the business well, who are patient in this business, who are disciplined in this business. Those are the people who make the money. Now, don't get it twisted. You can actually make $1,000 out of this market in a day. You can actually make $10,000 in a day. You can even make up to $50,000 in a day. And you should know what that is worth in Naira. So I don't need to call Naira, okay? So that's one beauty about forex trading. But on the other hand, if you deposited something like $1,000 in your account to trade and you don't know what you're doing in this market, you can also lose that money. So grab the knowledge first before you get into the market with your real money, okay?